Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Rahul Arora, CEO at Institutional Equities, Nirmal, joining in. Rahul, welcome to the show. Rahul, the kind of rally that we've seen in the markets right now, I think not really anyone expected this kind of an up move. And now you're seeing some bit of a correction that's coming in. Would you actually, relate this to the budget? Because last couple of years, the budget has been a non-event. However, this year, the bar has been raised. Expectations are high, taking COVID into consideration. How would you actually read the entire mathematics on this?
Good afternoon, Hiral, and thank you so much for having me on your show. So I think I'll break the question into two parts about the market and the budget. So I think if you remember when COVID hit us, the Nifty had fallen from 12,500 to 7,500. I think at that point, people pretty much wrote off the entire financial year because I think in many ways, when you analyze the market, your pivot point needs to be 12,500 on the Nifty. So that fall to 7.5 was basically writing off 21 completely. And then you went back to 12,500, which in effect told you were back to where you started from and you priced in the recovery in FY22. I think if you look at consensus earnings for FY23, they're in the ballpark of about 20%. So if you take a 20% on a 12,500 index, it takes you to about 15,000. And if you see where this correction has started from, it's pretty much started at the doorsteps of 15,000. So I don't think what has happened is extremely irrational. Of course, there's been a plethora of liquidity. I think there's almost $9 trillion worth of global central bank money that's floating around, predominantly, of course, based out of the US, Europe, and Japan. But I think there has been a method to the madness, and I don't think that turnaround from where it has happened at close to about 15,000. I don't think anyone can say it was unwarranted. I mean, valuations were starting to get obscenely expensive, and we've seen overnight what's happened with a few gaming companies in the United States, and the kind of regulation that's been spoken about over there. So I think that's as far as the market is concerned. I think, while you can't throw a dart and pinpoint the exact point at which the market will top for the year, I think somewhere around 15,500 is pretty much the top for this entire calendar year. So if an investor was investing in the market today at about, 13,700, 800, I don't think he or she should be expecting more than a 10% headline index return. Stocks may, of course, vary. To your question on the budget, I agree with you totally. The budget in many ways has become a non-event once GST was implemented because a lot of the taxation issues have been subsumed into GST. When people used to sit down with that pen and paper and start jotting the changes in every line item on GST, those days are gone. So I think the budget may probably have a lot to do with the MSME and the poor end of the society, because if you analyze the last 5 years, you've had demonetization, then a couple of years later, GST, and then a couple of years later, you've had COVID, 2016, 2018, 2020. We've not had a sustained run of economic growth. So I would expect a very large push towards consumption. It may come at the expense of taxing the rich and the super rich a little bit more, and that might get the market a bit upset, is my sense. It happened last year also, but I think it's going to be a very consumption oriented budget. That being said, it could be the biggest dream budget of this government's tenure. I still don't think it will take out 15,500 on the Nifty on the way up. From here, if you get there, it's still a phenomenal return for the year.
Right. And very interestingly, now that you're talking about a consumption-driven budget, would you agree to the fact that all the measures that the government has taken so far in the form of a stimulus or whatever the RBI has done have always benefited the supply side? And for the budget to be a growth-oriented budget, now they will have to focus on the consumption side?
So I think they have tried to do their bit on consumption. I think if you look at the Narega payouts, even under this establishment, progressively has gone up year after year. So I don't think you can say that the government has not tried to revive demand. I think they have tried to do things at the bottom of the pyramid in terms of taxation. There was a time that, income till only 2.5 lakhs was exempt. It was moved up to 4, 5. So I think they've tried to do their bit at the bottom end of the pyramid in terms of increasing consumption. So I think to fault the government for not having done anything on the demand side may be a bit harsh. Yes, obviously they have tried to tackle the supply side issues. But I think, Hiral, what's very interesting is, you've just had a very big farmer agitation that's taken place over the last 3 months. And it was very intriguing that the MSPs for a few products were raised just yesterday, as you were entering the budget, or, on the heels of the farmer protest. So I think there may be something to placate that part of the country, because it is the most important part of the country. We don't talk enough about it, but in terms of the population and contribution to GDP, it is the most important part of India, or Bharat, if you will. So I think there will definitely be an increase in payout. I don't expect them to just go and put cash into people's bank accounts. I don't think that's how it's going to work. But I wouldn't be surprised to see a Narega payout go up and a little bit more done at the bottom end of the pyramid. It could be, by way of HRA, tweaking with a little bit of housing, trying to push the threshold of tax exemption a little bit on the way up. It may not impact the people who are, drawing salaries of 20, 30, 40, 50 lakhs, but obviously the people whose velocity of consumption is very high, I think there you could see a lot happening.
Right. So with this, where do you think the thrust of the budget is going to be? We mentioned about MSMEs. Uh, Overall, if you see with regards to the recovery that we've seen in the economy as well, the thrust has been on urban India. However, how long will we be able to, on rural India? For how long do you think we will be able to sustain our backs on rural India? Because then something needs to be done for the urban recovery as well.
Well, Hiral, if you just see how the white goods companies have declared their results and the performance over the last 3 or 4 months, it seems like urban India ain't doing too badly either. I mean, the kind of sales that we have seen from companies under our coverage, whether you take the electricals or you take the durables, I mean, even the staples, they haven't done too badly. I mean, the volume growth numbers, if you take a look at Imami, or a Marico, these are companies that are coming out with teens, 13 to 15%. So I don't think, urban India, of course, rural is doing far better. There is no question. But I think, something has changed in the last 3 months. There's been a lot of talk over the last 15 or 20 years in terms of increasing manufacturing's contribution to GDP. It was something that Dr. Manmohan Singh spoke about for 10 years. It was spoken a lot about during Mr. Modi's first tenure. But in the last 3 or 4 months, if you see the thrust that has gone into the production linked incentive scheme, or what we know as the PLI, I think there is going to be a very, very serious thrust on the manufacturing side. It may not necessarily confound itself to the budget. There have been a lot of announcements to that effect. It's not covered everything yet. Refrigerators, washing machines. There are a lot of things that haven't come into the PLI yet. You're just starting to see the rumblings of it in chemicals and pharmaceuticals. So I think the budget could have something in terms of taking Make in India to the next level and encouraging domestic manufacturing to try and probably reduce the dependence of agriculture in India. Here it's kind of funny that even 70 years after independence, every year we look at the rain gods, in June, July, and try to say, okay, this year the monsoon's good, rural consumption will be good. So I think successive governments have tried to reduce the dependence on agriculture and increase manufacturing. But I think this is the first time under Modi 2.0 where you're actually seeing an intense mindset towards trying to do that. And I think the government may have a lot of sops to that effect that will come through. It may benefit directly or indirectly. I mean, a case in point is Dixon Technologies. I mean, if you look at the last 15 odd months, I think the low of the stock is about 1,560 and the high of the stock is, I think, about 16, 17,000. It's probably been the stock of the market for the last 15 months. So I think there will be probably more movements along beyond SME and consumption. I think the PLI is probably going to be one of the centrifugal forces or pieces of the budget around which the entire document could revolve.
Right. So taking this into consideration, now on the tax structure as well, as you mentioned, yes, there could be a higher taxation that could be coming in for the rich. There could be some support for the poor. However, there is a conversation going on about a COVID cess as well. Do
Mhm.
you think that will be taken up well by the private sector as well as, by individuals?
I don't think there is going to be much of a choice here, whether people like it or not. It's going to be something that you've got to swallow and move on with it. So I think it's pretty much a given that it's going to come through. Taxation for people who are above that 40-50 lakh income bracket is going to go up, whether they like it or not. But like I said, it's just something that you have to, you've got to take it and run with it. I don't fault them, right, Hiral, because last year revenue collection has been dismal for the government of India. So obviously, I was reading the note that our economist Teresa put out on the budget expectations. If you see her note and you see the taxation increases that she's talking about, they're on a very, very, very depressed base. You actually try and compare the tax projections of FY22 to maybe an FY19 actual or maybe an FY20 actual as well. So, whether you're looking at a corporate tax or, direct taxes or even the sum total of indirect taxes, when you see those growth rates of 18, 20, 22%, let's not forget they're coming on a very, very depressed base. So I think the two important factors for the government of India is going to be disinvestment because the markets are very close to all-time highs. So they're going to try and push out as much as they can. The borrowing number, I think by and large, the market is working with about $12 trillion gross and about $9.5, $9.6 trillion net, and about a 6% bond yield, give or take. But I think obviously the funding of that is going to be an interesting aspect. But I think disinvestment at a 14, 15,000 Nifty, the government should do everything to put out whatever they can, which will aid taxation growth that you're going to see. So I think the cess is a given. Just pick it up, swallow it, and move on.
Absolutely. So I think the non-tax revenue is something also which will be critical for the government, as you're mentioning about disinvestments, because that could come to the rescue, taking the positive market sentiment into consideration. And with this, Rahul, we've been talking about the expenditure front as well. Now, when you're talking of expenditure right now, private capex has dried up completely. This is the time when the government capex actually needs to pick up. And if that happens, which are the 2 to 3 sectors, according to you, which will be of priority, which will be helping the economy as well?
So here, I think to say that private sector capex is not happening would not entirely be correct. Because if I look at, let's just take one infrastructure related sector, which is cement. Most of the companies under our coverage are actually adding capacities. You take just a case in point, if you take the Aditya Birla Group, right? They have just announced a 5,000 crore foray into paints. They have just invested 500 crores overnight into Sabyasachi. So it's not that their investments are not happening. And I'm just giving you one group. Now, you take the Reliance Group, for example, the kind of investments that they have made in infrastructure and in and around Geo over the last 1 year. So I think investments are definitely happening. To your specific question on the economy related sectors, I think if you look at the NHAI rollout, the kilometers per day that are being awarded today are the highest they've ever been awarded. And you can see that in the order book of, companies like a PNC Infra or a KNR Construction. I was just hearing the managing director of L&T on media yesterday, sounding extremely bullish. So right from the smaller ones to the larger ones are seeing the benefits of road construction. Affordable housing is a pet project of the Prime Minister of India. It's seeing a lot of thrust. And I think the indirect beneficiary of that is the cement sector. And the kind of volume growth you have seen, if I am not mistaken, Hiral, FY21, the current financial year, which ends in a couple of months, could actually be one of the best years that cement companies in India have seen in about a decade, both in terms of volume growth, in terms of cost optimization, and in terms of realization growth. The EBITDA per ton numbers for some of these companies are touching 1,000, 1,100, 1,200. So I think, road, affordable housing, and therefore by default, cement would be the three focus areas for us as a house if we were to look at playing the capital expenditure theme through the union budget.
Right. So with this, when we mentioned about the net borrowings also, that is going to be elevated for the government. Now, with that, there would be some revenue that could be coming in from the RBI in the form of dividend. However, with this, what's your expectation with regards to where the credit growth goes? Because there is a possibility that the bank demand for G-Secs may sustain, but the pace for credit recovery will remain slow.
So I don't think we're looking at a case where credit growth is going to get into the teens, Hiral. I think as FY22 goes on, if we're able to hit 10-12% on a sustainable basis, I think we should be okay. Again, it's a base effect story because you're going to be comparing it credit growth on a year-on-year basis, and so in that regard, everything in FY22 is going to look like a very rosy picture. So the way we're looking at it, and we've done this exercise internally, is try to look at FY22 over FY20 and see how much benefit there is. So I think most of the banks that you analyze and the results that are coming out are trying to get more and more retailized. I don't think the corporate loans are picking up in a very, very material way. Most of the corporates that are out there are either going through NBFC funding or looking at rights issues or QIPs and things like that. I mean, just a case in point, a PSU, housing finance company that declared its results overnight. We were just discussing that on our morning call today, is also planning to go via the QIP route. So I don't know whether bank funding or credit growth is going to be something that is going to return to the good old days of maybe pre-demonetization. But I think if we are able to hit that 10-12% kind of growth rate, we should be okay. I think that should capture the kind of numbers that we have and are working with in terms of capacity expansion across all the sectors we spoke about.
Right. So if you have to talk about, different sectors as well, one sector that everyone is talking about right now is oil and gas, where it could be getting under the GST gambit. Now, I know GST as a subject matter is not something where the decision could be taken in the budget. Probably they could make recommendations to the GST Council. But do you think that's an important aspect to consider as well? Because again, simultaneously, taking the way crude prices have moved up, there is an anticipation that excise duty could be reduced as well right now.
So I think that's pretty much a given, Hiral, that excise will probably be rolled back. And I think if I'm not mistaken, in our own FY22 projected numbers from my economist, we're factoring an 8% degrowth in excise collections on a year-on-year basis, if I'm not mistaken. I think gas under GST has been spoken about for a very, very long time. I think the fact that the Prime Minister himself has taken so much interest in trying to get gas to the women at the bottom of the strata, and he makes no bones about it when he speaks about it in terms of giving the LPG connections to housewives and trying to improve their quality of life. But I think given the thrust that we even have at the other end of the spectrum in terms of electric vehicles, our own commitment to carbon neutrality, and the way we are talking about carbon emissions, Tesla making an announcement that it's probably going to be coming into India at some point. So I think, when you look at gas on both ends of the spectrum, in terms of usage, I think it's about time that they actually got it under GST, Hiral. And I think you're right, this is not the platform for it. There may be a mention for it. There is a dedicated GST council and it may well be referred, but I personally think that the time has come to put gas under GST. Our oil and gas analyst Ramesh also believes that that is the case. And I would not be surprised that if that happens at some point in the financial year FY22.
Right. So, Rahul, from here on, if you have to look at individual sectors, which sectors, according to you, actually require a major change or a major announcement from the budget? Which are the sectors we should be watching out for? And which sectors, according to you, could be a completely non-event?
So, I think, Hiral, services generally as a sector is a non-event for the budget. So I don't think there's anything that the government of India can say or do that will materially impact, sectors that have a very large export component, which would include pharmaceuticals and IT services to that extent. We have spoken about the PLI scheme and the various sectors. I think that's going to be a thrust area. I think consumption is going to be a thrust area for the government of India. And then, the three key aspects that I told you about with respect to affordable housing, roads and therefore cement as a byproduct. So the one sector I would like to throw in here, Hiral, would be insurance. Ayushman Bharat has been another pet project of the Prime Minister, and he's been very serious about getting insurance cover at a very negligible cost for everyone out there. If you see the numbers, over the last 4 or 5 months, And not just the listed companies like an HDFC Life or an SBI Life or a Max Life Insurance, even private sector names like, a Bajaj Alliance or a Birla or a Tata AI, they've actually started to look very, very, very strong. I mean, these guys are growing anywhere between 15 to 18%, and this is no mean number. Some of these are very, very large insurance companies. So if you actually cut the GST on insurance, from the current 18% to maybe 12 or 15%, you make the product a little more affordable also. And that, of course, feeds into the overall premiums that you pay. So that is one aspect. The other is taking off from your previous question on gas. There is a clamor by the auto industry to reduce GST on autos, both two-wheelers as well as passenger vehicles. So with this entire thrust towards personal mobility, people till today are not very comfortable stepping into trains or sitting in an Uber or an Ola right now, and you're seeing the preference towards personal mobility. There are people who never drove before that have learned driving in this pandemic, and are starting to go out there and buy bikes or whatever else. So I think that could be another interesting area. There is a little bit, but then again, both these aspects, there could be mentions in the budget, but there's a council that deals with them. So I think if there is something along these lines, it's a different form of FMCG, if you will. It is still a consumption product because eventually I'm buying insurance or an auto or anything from my discretionary. So when we talk consumption, we are very, we start thinking of Lever, Nestle, ITC, and those names. But this is consumption if you sort of, broaden the horizon, so to speak. So I think in totality, the government understands that this is probably the most important budget it has presented in its tenure because it is coming on the back of an international pandemic. And I don't think they will disappoint. But like I said, Hiral, so much has happened so fast. We were at 7,500 just a year back on the Nifty. We were at 15,000 just a few days back. The index has doubled. So I think everything and their, whatever you may want to call it, their mothers, fathers, and everything have been priced into the market, so to speak. So to make a case from here for the kind of returns we've seen over the last 1 year is a very, very difficult call to make.
And Rahul, I mean, yes, there will be other sectors like hospitality, tourism, which will have to be in focus as well, taking the kind of beating that they have taken on the back of COVID. But one question with regards to markets is that the liquidity that has come in right now, it's a mainly FI-driven market because the mutual funds are the ones where there is a lot of redemption that has happened. There is either, private redemption that's happened or the mutual fund managers are sitting somewhere on cash. Do you think the next leg of an up move in the markets could be led by the domestic funds coming in? And if yes, is that because that's usually the trend that we pick up?
So I would like to give some credit to the mutual fund managers in India here, Hiral. I think a lot of them probably went in and bought buckets between 7,500 and 10,000 on the Nifty.
Correct.
And they started selling only after 13 and a half on the way up. So they're not, while yes, we use the word redemption, and sometimes, it's almost akin to a very monstrous word. But the fact is that when they started selling is when the FII started buying, and that sort of tells you a little bit about the smartness of our own domestic mutual fund managers. Yes, the last 2,500 points you can argue are FI driven from 13 to 15,000. But what's a little disconcerting, and I don't know if this is a sustainable trend, but over the last 4 or 5 days when the market has corrected, FIs have pretty much sold on most of those days. So I don't know whether that is anything to do with what's happening in the US and the news flow we've been hearing, or just a general call on India and the valuations. I mean, I don't think this has anything to do with the budget, to be very honest. If anything, you would sell on the news and you would sell after the budget if you had to. You would never preempt a document like that. So my sense is that, I don't think there's going to be too much aggressive participation by way of domestic fund managers. I mean, we talk to them day in and day out. They're struggling for ideas. Just a case in point, the fact that we as an institutional broking house have rolled forward our valuations to FY23 tells you that we have run out of ideas to pitch on a 1 year forward basis. It's as simple as that. And it's not just me. All my MNC peers, all my domestic larger institutional peers have all been compelled to do that. I mean, I don't know one broking house in India where if you tell them to justify a stock on FY22 and give you a 15% upside, there may not be too many of them.
Correct.
So we're all guilty of it. We are in the business of broking. We can't sound bearish beyond the point, but yeah, I mean, at the end of the day, mutual fund managers are managing our money, your money, my money, and I think they have to be very cognizant of the fact of as to when they deploy it. So I don't think domestics are going to rush in at this level. I mean, I'd be surprised, and even FIs, the kind of money that they've put in on this base to keep pouring in money, I'm not so sure. FDI, though, on the other hand, is a totally different animal. FDI could come in leaps and bounds. You could have the Apples and the Foxcons of the world come in and set up shop left, right, and center. That could happen, and that's sticky money, because once that sticky money comes, it stays. As we've seen in the case of equity investments, the money comes in today, it's gone tomorrow. I mean, you've not even had $1 billion of FI selling, and the Nifty is down 7%. So that's how fragile the so-called FPI money is. I would prefer the FDI, and that may well continue. That may go up many fold. It's very possible with this entire PLI noise over the next 3 or 4 years, that may go up many fold.
Right. So very lastly, Rahul, if you have to, I know you just said that, next 12 months is a very difficult situation to really give out ideas which would give you those kind of returns. But if you have 2 or 3 sectors that you would advise a retail investor to play, which would that be, and any recommendations that you would want to give?
That's a tough one, Hiral, because like I said, since we've rolled over to FY23, I think we cover 150 stocks. If I'm not mistaken, we probably have 120 buy ideas in there. So it's very tough to zero in on few ideas like that. But I think just logically, I think insurance as a theme should do very well. With this entire issue of China and people wanting to sort of cut their dependence in some way, shape, or form, I think specialty chemicals is another space that could probably land up doing reasonably well, is my sense. And just to quote a line from the movie Gully Boy, one of my favorite stocks, Hindustan Lever, has been dead for the better part of the last 8 months. So I'm hoping that uska time aayega. And, I think we may be at a bit of an inflection point on HUL, I think. So that's probably, I've been a bull on that stock for the last 15 years. I'll tell you the interesting point about Hindustan Unilever, Hiral. At no point when you invest your money into HUL will you lose money. It is not possible. It has not happened. I don't know one investor who has lost money on HUL from whatever price he or she may have bought it. It's happened in Reliance. It's happened in any other company. It's not happened in Lever. And the interesting point, Hiral, I'll tell you about Lever, is that out of the last 36 quarters, which is 9 years, Hindustan Lever's operating profit has degrown in only 1 quarter. Only 1 quarter has he shown you margin contraction. There is not a single other company in India that's giving you that. There is a reason why it is where it is. It's been a 10 bagger. It broke out. It hadn't done anything for 10 years. It used to be 250 rupees. It's been a 10 bagger since then. So I'm not surprised it's consolidating. But I think along with specialty chemicals and insurance, I'd probably say Hindustan Unilever will probably be one stock which would see a little bit of re-rating on the way up in the next 1 year.
Absolutely. I say all the investors would be watching out for all of these as well. Thank you all so much for joining us. I think great insights and a great realistic view coming in from your end as well for how the budget could be and what the markets could look like as well. Thank you so much and stay safe.
Thank you for having me.